We're moving on to Brown and Brown. So Brown and Brown Insurance is gonna just go over, some of the needs that our dealers need to have, make sure you're covered and protected. And then after that, when we break in, when we do break, they need us to take everything of ours out, okay? So, all right, here we go, this is Trevor.
Well, Ronnie got me real psyched up to sell some covers, so, and don't worry, this is only gonna be like an hour, maybe 2 hours, so we'll move through. This is who we are. We're just down the street. We are the largest in Florida, though, and we are the 6th largest in the country. So we're around. I don't know how I missed the boat. I should have done this about boats instead of planes. But we talk about a pre-flight check. So you have a system to manage risk, which is going to include your insurance policies. It's going to have contractual risk depending on who you're working for. And it's also going to be just the activities you do on the job, the safety measures that you take. So your entire risk program, you want to know how it's going to work before the plane leaves the ground, before the boat gets in the water. Is the plug in the boat? Have you checked all the lines? So that's what I'm going to talk a little bit about. And I really want to break it down to the general liability. And this is a third-party coverage that protects others. So it's not going to protect your employees. It's not going to protect you specifically if you're injured for bodily injury or property damage. It's going to protect the homeowner, the boat owner, for damages you may do in the scope of your work. I'll break that down a little bit, talk real quickly about a casualty barrel, which is just a visualization, and then we might get to workers' comp frequency versus severity. So we talk about the risk analysis. And one of the biggest things I noticed outside, and I don't know if you've always had this, but superior coverage, unmatched convenience. Is that kind of a tagline?
Yeah, that's okay.
Okay, so superior coverage. And I was kind of thinking about, you install a boat or you install a boat cover for somebody for a specific boat. You're going to take the time to measure it. You're going to send those measurements out. You're going to build it to those specifications. The same thing has to be done for your insurance policy. It's very specifically tailored, and that should be done by communication with your agent. And you guys, your boat, which is your business, is changing every day, right? It's getting bigger, smaller, you're adding things to it. Are you going to have the same boat cover? You're not going to have the same boat cover. That always needs to be addressed all year long. And the reality is, a certificate of insurance that you may show somebody is not your policy. The summary that an agent might send you, that's also not your policy. It could be a 300-page book that is a contract. And that's the part that has to be analyzed and broken down to really see where you covered and where do you have exposures. So you have a dish, you have no idea what's underneath it. What's on your plate, what's on the carrier's plate. And that's what this is. So your business, completed operations. So that's after, this is how general liability is broken down. You have premises coverage, which is when you guys are on site doing work. Somebody could get injured on the site. That's third party. But then you also have once you leave. Once that cover is up, the damage it might cause is your completed operations. Is that on your plate? Or are you going to put that onto the carrier for a premium? Or do you know? First dollar coverage, do you have a deductible in place? Employment practices liability insurance. A lot of you, maybe it's only 2 or 3 employees, you may not need this, but eventually you may get to a point where you have you have supervisors, and the things that they do may create exposure for you about discrimination, wage and hour type claims. That's where this other coverage is going to come into play, and it's not standard. Hired a non-owned auto. Are you driving your own autos? Are your employees driving your own autos? Or are they driving their own autos? Do you know? Equipment. How many times do you have you haven't installed your work yet, but it's on site? You may have $20,000 worth of material, $10,000 worth of material and tools on site. Do you have that covered or do you not? Workers' comp, weekend claims. We'll talk a little bit about that. Waivers of subrogation. These are contractual terms that Touchless may require, or if you do it at a really big job site, or for a business or a marina may require some of these things from you. There's all these terms that if they're not in your policy, you're self-insuring for them, or you may lose the ability to build or do work in that place ever again. Cyber breach is less of an issue for you all, probably a much bigger issue for Touchless Cover than anyone else. This is, don't try to memorize this, and I'm not going to go through it, but this is a very large contractor and all the exposures that they have and how they might want to cover them. The middle is that general liability. The ones on the outside are the hired and non-owned auto, the employment liability, employment practices liability, and then all these excluded perils. There's always going to be things, no matter if you're making $100 million a year, you may not choose to cover. But the important part is knowing that you are consciously choosing not to cover those items. We don't want to have any surprises. And you see in the bottom of that black box, endorsements per project aggregate. Some contracts are going to require that. Some marinas may require that. Waivers of subrogation, blanket additional insured. These are things that you may have agreed to in your contract, but your policy doesn't follow that. And you need to have your agent make sure you're working through and paying attention to these items. Workers' comp. So I'm going to just talk briefly about this because we're in a lot of different states, and while it's not that different from state to state, it's important to note that this is a first-party coverage, and just because you choose not to buy it, especially in Florida, doesn't mean that you're exempt from providing the benefits that the statute requires. So in Florida, an employee dies on the job, they're entitled to $150,000 in legal benefits. If you're doing any sort of USL&H exposure, that's much higher. Okay, the benefits provided by the federal United States Longshoremen and Harbor Workers Act is much higher than these. That's why it's more expensive, not just because it's more dangerous. Funeral expenses, 100% medical expense, lifetime. No deductibles, no co-payments, not subject to tax. And then there's a whole sheet that goes with this. It talks about disability or indemnity benefit. This is what your employees are entitled to. If you've ever had a claim, you understand the system at all, you know that managing these claims, making sure they don't happen, is going to protect your bottom line. This is just a quick case study on an employer that I worked with. Almost every state uses the NCCI system. That is a system that differentiates employers that don't control frequency, so small claims that are often, compared to severity. And so they had a 1.73 mod. That's what's circled down there. That means they're paying 73% more than the state rates, okay? So this was 2014, this was 2015. It actually went up because it was a latent claim, because the NCCI system, it makes up 3 years, but 1 year is the not most recent year. It's basically what's called a deferred year that allows claims to season. So it went up. Then as claims started to fall off, they were managing, they put all these processes in place, the mod went down. I don't have this year's, it actually went to a 121. The bare bones of it is what they paid in payroll didn't go up. What they made, was basically the same. But what they paid to the workers' comp system went from $152,000 a year to $140,000 a year, and this year they will effectively pay about $80,000. So if you're expecting to bid on jobs or you're expecting to make a profit, this is going to be a huge determinant, especially as you grow and you're required to have this coverage. You really should have it either way, but this is a breakdown of the system, which I don't want to go into a lot of detail, but it talks about the expected side, which is the payroll, versus the claims and how they're going to directly impact what your costs are, and the system that you can use to manage it, and that's the work comp system. So those are the two most important for everybody in here, is the general liability, which is the third-party coverage, and then first-party coverage of workers' comp, and the fact that if you don't have it, anyone that knows how the system works or what employers or employees are entitled to is going to require it from you. Because if they don't take it from you, they are going to be sued themselves. And that includes touchless cover. They're my client, I want to protect them, and you all are out representing them in the things that they do. So they need to be able to be protected as well, and there are certain requirements that they're going to ask of you all to put in place. They're not expensive if you know how to do it, but the risk control that you actively put into place, just like you're talking about with controlling your narrative and controlling your brand with the top level in the marketing, you have to be putting in some effort on your insurance program, your safety system, because as you grow, you're outgrowing your cover. You need to keep moving on that. So I'm going to answer any questions later, So if anyone wants to come up and ask me specific questions, I'd love to talk to you, but I don't want to take up any more time here. So thank you.